Today is Monday, October 12th, and this is a post-market review for the stock market activities today. Here is the agenda of the day. Of course, we're going to cover the market action today, the closing, and the impulsive rally we had today. We will talk about what was behind it, and of course, we'll cover the usual subjects. The coverage of the options market will be very important. And of course, we will cover the president's tweet storm about the stock market today and the upcoming Apple event. We also do have charts of the SPY, the Qs, the dollar index, the VIX, gold, Apple, and Tesla. And here we go. The diamonds in the green, 250.62 points or a gain of 0.88%. The Nasdaq, the clear outperformer of the day. And of course, this was not a surprise for the followers and the subscribers of this channel. The moment you woke up in the morning and you saw Apple trading above 120, you knew exactly what that meant. But here we go. In the green, 296.36 points or a gain of 2.56%. Massive gain for the Nasdaq. What about the S&P 500? Another big day, 56.09 points or a gain of 1.64%. Who was behind the move? Was it another surge of call buying by SoftBank's Masa-san, aka the devil? Or was it the president doing some trick with the Treasury Secretary Slimy Mnuchin to pump the market? Or was it simply the Robin Hoodiots stampeding to buy Apple and Amazon calls before their respective events? Or is it just a combination of all of these factors? Who knows? But we will try to dig in details to find out. And by the way, let's check on our oligarchs and see how they did today. And as you can see, Jeff Bezos made a little over $8 billion today alone. Rumor has it Jeff Bezos wants to dump some shares and raise about $10 billion. So the zombie traders and the morons who stampeded on buying Amazon shares might have helped him a little bit, of course assuming that Mr. Bezos will dump some shares tomorrow. And of course Zucchiniberg had a good day today. And look at that, McKinsey stock, or Scott rather, made a nice chunk of money today. I have no problem with her whatsoever, and McKinsey, if you're watching this, please marry me. I might be a plumber, but I'm an honest man. Moving on to the sector's performance. You guessed it. Technology on top here, gaining the gold medal. Communication services for the silver, and the bronze goes to consumer cyclicals. The laggards of the day, basic materials, energy, and real estate, all of the sectors that outperformed last week. What's going on with the futures market? Muted and declines across the board. We only have few gainers here. OJ in softs, and of course milk in meats. Yet when you look at crude and soy products, even in metals, platinum and palladium, and in softs, coffee, sugar, all declining today. Moving on to the big casino, the options market, and perhaps becoming more important than the stock market itself. And here we go, the big bomb of the day, leading the options market, Apple, 3.7 million contracts traded today, 75% of those were calls. Absolutely insane and unbelievable number. When you think about it, 3.7 million contracts is equivalent to 370 million shares in notional value. Apple shares today traded 239 million shares, meaning that the notional value in the derivatives market is exceeding the volume of the underlying stock. This is, ladies and gentlemen, what we call a gamma squeeze. What happens is, whether it is SoftBank or the Robin Hoodiots or whoever it is, traded a massive volume of call options on Apple. Now, the writers of the options have to purchase the stock as a hedge. So when you buy a call option, somebody is selling you that call, writing the option. And that somebody has to buy the stock as a hedge because they don't want to be in a position where the stock surges and now they have to purchase the stock at a higher value and sell it at a lower value, aka the strike price that you bought the call at as we get nearer to expiration. And what happens during a gamma squeeze is the gamblers and the morons stampede massively buying calls, overwhelming the market, overwhelming options writers who in part stampede in the stock market and buy Apple shares as a hedge. Now, your next question might be, what do you make of the fact that the notional value of Apple's option contracts that traded today exceed the actual volume in the stock? It tells me two things. Number one, either the option writers already have enough shares of Apple that they bought at a lower price as a hedge. They already have it and they don't need to purchase more. They certainly did a lot of buying today, but not equivalent to the notional value of the volume in the options market today. And in this case, if they're actually sitting on excess shares, you're likely to see the pump and dump scenario where they let the stock rally for a little bit and then create a dump before expiration and before the stock hits the strike price of the highest open interest. Scenario number two. Some options writers are comfortable enough that Apple would decline and they need not to hedge against the position they wrote. And this is the danger that could accelerate and amplify the gamma squeeze effect. Say Apple rallies tomorrow and for the remainder of the week, and here we go, we're getting closer to expiration. These writers are now going to scramble and stampede to buy Apple shares before it hits the strike price they sold the options for. And that, of course, will probably skyrocket Apple shares. We will find out which scenario will take place perhaps as soon as tomorrow. But needless to say, the action in Apple options today was quite unbelievable. Let's continue with the options market coverage. At number 2, Tesla, 671,000 contracts traded today, or about 70% of those were calls. Facebook at number 3 with about 547,000 calls, 72% of those were calls. You see all the tech, the NASDAQ whale names are the ones catching a bid today. Is that a coincidence or what? What about the volume leaders? As you can see, they're just rolling up to the next number in Apple. They had 120. They're now buying 125, 130. They're just rolling up the calls. And of course, yours truly, I closed my 120 calls in Apple earlier in the day. And if you do remember, I also had TQQQ. This is a stock position, of course, and I closed that as well. What does that mean? It means that I'm not buying the surge today and I'm taking my profits off the table, anticipating a reversal. Now, what's going on with the change in open interest? Starting with the increase in open interest, Citibank, they're buying the 50 call expiring November. Of course, Citibank is reporting earnings tomorrow, and also the Apple 120 calls expiring this week. So here is an example. I closed my 120 calls. Somebody bought the 120 calls. This is what makes a market. Some people believing that Apple will surge beyond 120 by the end of the week, and it certainly is right now. Some people like me think that there is a potential of a reversal as soon as tomorrow. Let's check on the decrease of open interest. Apple 137.5 call expiring this week, being closed today. So traders here made a wild shot, scored big money, and now they're taking profits off the table, saying that Apple will not get anywhere close to 137.5 anytime soon. And of course, the Microsoft 210 call expiring this week was closed today as well. Again, traders taking profits off the table. And let's review some interesting trades that took place today in the market. Number one that caught my eye for GM General Motors, the 36th call expiring in November. Now that is a big call here and is notable and worthy of paying attention to. I'm a share owner of GM and I certainly would like to see the name trading at the 36 level by November. And also the Apple 118 put expiring next week. So again, a lot of traders here fading the rep or shorting the rep rather. And you see it with another trade where Amazon puts the 3250 expiring this week. So again, the hype before the event for both Apple and Amazon, and then sell the news thereafter. This is exactly what these two trades at least are telling me. Moving on to the heat map analysis. Right away you can see that the FANG Man stocks outperformed today, aka big technology names, the big boxes of tech. You see them leading the day. Exception, of course, is the N in FANG Man, the first N. Netflix is a little muted today. Of course, it had massive gains last week. But we also see that donkey mentality or the zombie mentality, whatever you want to call it, of morons buying first, asking questions later. Matter of fact, don't ask questions at all. Case in point, they're buying Morgan Stanley and Goldman Sachs, both reporting earnings this week. They're pumping the names before earnings are even released. How stupid can these people be? Unless, of course, they have some insider info. And of course, in many cases, the rally was a tide that lifted all boats. And of course, looking at my portfolio today, I noticed that Mondelez is trading as a tech stock up over 2%. Don't ask me why, I have no clue. Perhaps PepsiCo got an upgrade and Mondelez caught a bid on the heels of that. But again, today's action in the market overall is not rational whatsoever. And I think that we hit a lot of gaps and we will soon hit an air pocket and flush down perhaps as soon as tomorrow. But let's put a little color here and review the rotation trade. You don't need me to say it because you already know that momentum and big tech stocks outperformed today. But it is notable that big tech name, aka SoftBank names, outperformed today. If this was a momentum trade that we witnessed today, then why isn't Shopify trading higher? Why isn't Zoom trading higher? Why is it only Amazon, Facebook, Apple, Microsoft? It certainly tells me that there was funny business underneath the market today. And perhaps we will find out tomorrow who was behind it. Furthermore, looking at the other side of the aisle, if today's rally was stimulus hope or stimulus optimism, then how come that the airlines did not rally today? So it was not stimulus hopes or optimism, it was somebody manipulating the market via options. That's all there is. And they're creating a pump and dump because the fact that they're betting via the options market tells you that they are short-term bounded. And it is only a matter of time, a short time that is, before they start dumping massively. Moving on to the headlines that shape the day. We don't have a lot of headlines here, but we do have a tweet storm from President Trump. And I think he did break the record today about how much he bragged about the stock market. And we do know that it is a reliable indicator. Every time he brags about the market, it is a sell signal. Today, he bragged at least 5 times about the stock market the last time I counted. So perhaps we will see a sell-off of epic proportions coming very soon. And of course, here are some of the tweets he released today. These, of course, not arranged by time, they're just randomly arranged. But you can see, of course, that he was watching the stock market today tick by tick. This is the mania and the obsession about the stock market, and reading his tweets, you can see that he believes if he gets into November with the highest stock market ever, that he will win by default. That is, of course, wrongful thinking, and the more he thinks and bets on the stock market to save his re-election prospects, the deeper he digs his own political grave. Somebody in the White House has to say, Mr. President, this year it is all about COVID, not the stock market. Nobody gives a rat's ass about the stock market. And of course, there was no coherent thinking behind these tweets. As you can see, here's a tweet from CNBC's Carl Casadilla, and he noted how the president, with the same breath, attacked socialism and then cheered for a very large stimulus. But moving on, let's talk about Goldman Sachs. Goldman Sachs says and encourages everybody to short the US dollar, because Goldman already assumes that we will have a blue wave happening in November, and that should be bad for the US dollar. Be careful here listening to Goldman, because when Goldman says buy, you sell. When they say sell, you buy. They have a very good proven track record with that. Now, let's talk about Apple's event tomorrow. Of course, it wasn't long enough before we had the Tesla cult with the whole hype of Battery Day that was supposed to change the world and planet Earth will move from its axis. And you know what? Nothing happened. All what happened is the stock actually sold off right after the event. We saw sell the news phenomenon. And now we have to deal with the Apple cult and their upcoming iPhone 12. I don't know what features the phone will have, but I'm assuming that perhaps the new feature will be the chargers are sold separately. This is of course the donkey mentality of buying first, asking questions later. They haven't even thought about whether we're gonna have stimulus or not, because without stimulus, who's gonna buy all these iPhones? And is the upgrade really worth it when the 5G infrastructure isn't really there? It doesn't matter. It is buy first, ask questions later. Matter of fact, don't ask questions at all. Put your blindfold on and buy. And of course, Apple is a marketing company more than it is a hardware or technology company, because they've created a very massive cult following who will drool at every little feature that Apple adds every year. And of course, these features are not new at all. They were done by Samsung and Huawei and other phone manufacturers before. Samsung had a 5G phone last year. So what is so special about Apple beside the marketing? And of course, if you watch any Apple event, you can see the donkey mentality in real effect. Every time the speaker announces a new feature that is in effect not a new feature, you hear the morons going, "Oh." They're so amazed with outdated technology. This year, ladies and gentlemen, the iPhone 12 will feature a screen. Oh. This is, of course, the stupidity of consumerism in the 21st century. If they give you a horse manure, a piece of horse manure, and they put an Apple logo on it, some moron out there will pay $300 for it because it is the manure, not the regular manure. And by the way, do you think it is a coincidence that every year they add a camera? Because when you take your cute selfies on Instagram and you have 2 cameras instead of 3, how dare you? Are you not ashamed of yourself? What are you, poor? You can't afford the new iPhone with the 3 cameras? You're using 2 cameras instead? And now this new iPhone, of course, will have 4 cameras. So if you're taking selfies with your outdated iPhone with the 3 cameras, shame on you. And of course, that illustrates how easy to become rich in this country. People think that becoming rich is a difficult task and you have to be really smart. Not really. The zombies will buy anything if you market it correctly, and if you convince them, of course, that your product will change their lives somehow. Their wallets are wide open. Are you gonna take their money? And if you're a new entrepreneur, here is what you need to know. Don't think about the product. Don't think about the idea. That comes later. First of all, look at the Maslow human needs pyramid. It is all about psychology. Figure out which human psychology and need you're going to exploit with your product, and then you build your product. And you will see the zombies handing you their wallets for the most simple and dumbest idea. Why do you think people buy lottery tickets? And of course, the last thing I'm going to say about this, I am sticking to my Samsung S10 Plus. It is the only phone with a headphone jack. The camera is beautiful. The display is amazing. It works fine. I will probably not upgrade it until I die, because they took the headphone jack out of every phone, and I refuse to buy a phone with no headphone jack. Enough with the ranting, and let's cover some charts here, starting with the SPY 15 minutes perspective. If you do remember yesterday, we talked about the sky is the limit for the SPY. And as you can see, the SPY, along with other indices, gapped higher significantly in the morning. And indeed, the sky is the limit. However, notice from a 15 minutes perspective, the last candle of the day, specifically the volume on that candle. It is a little concerning, but we're not going to make a big deal out of it for now. Moving on to a daily chart of the SPY. Where is the next resistance? It is 356. It coincides, of course, with the top of a breakdown candle. However, I don't think the SPY will reach all the way there. I do believe that it will reverse before reaching that level. All the gapping that we did the last 4 days created massive air pockets that we will have to hit very soon. These air pockets will create a massive flush to the downside. So be careful here, and if you made any profits today, consider taking chips off the table. Moving on to the Qs. Here's a 15 minutes chart. We talked about the trend line, and we had two scenarios, whether we will hit the trend line and reverse from there, or if we're going to climb and recapture the trend line. This is exactly what happened today in the morning. You saw a little bit of struggle as I'm highlighting on the chart, but eventually the Qs broke through and recaptured the trend line decisively. Now comes the typical charting behavior, which when you, or it's not you actually, it's the chart, breaks above a previous trend line and recapturing the trend line, the typical behavior is to retest the breakout by retesting the trend line. So this is what I'm expecting to happen, perhaps as soon as tomorrow. But let's move to a daily chart to figure out the next resistance. We talked about it before. It is the 298 level. And of course, as in the SPY, it coincides with the top of a breakdown candle. Again, I don't buy that the Qs will reach over there quickly. I think we will reverse before we hit the 298 level. Moving on to the Dixie 15 minutes perspective. As you can see, the dollar index decisively said today that 93 is the floor and 93 is the support level. And you saw it bouncing from that level 3 times, catching support 3 times. In a typical charting behavior, testing and retesting support means that you're about to blast higher. And this is exactly what we've talked about in yesterday's video. I smell a trick from the dollar index. I'm not buying the fact that the dollar index will melt down and this was just a small pop and that's all there is. Keep in mind that even Goldman is now encouraging traders to short the dollar index. What happens when all these dollar shorts find themselves on the wrong side of the trade? Furthermore, moving on to a daily chart, the ABC pattern is still alive, so long as we don't break and close below 93. So it is on the table. And that leads me to the next chart of gold. As you can see, the 1925, we talked about this zone as a resistance. And you see gold having a tough time breaking above that level. Now, if the dollar is ready to execute a bullish ABC pattern, then what will happen to gold is a bearish ABC pattern, and we talked about this multiple times before, facing resistance in the 1925 zone and then reversing down, creating the C leg. Here is another indicator that today's market move was a fugazi. The VIX daily chart, you see the 25 support holding yet again. And I do believe that the VIX managed to close in the green by just a little bit, even though we had a monster market rally. Certainly notable, and you have to keep that in mind. Moving on to Apple, the most important chart. We talked yesterday, 120 is a critical level. Breaking 120, trading above 120 decisively will mean a massive market rally. We talked exactly about that in yesterday's video. Waking up today in the morning, seeing that Apple is trading above 120, that was a no-brainer for me that we will see a massive monster market rally. And we did indeed see that. Now, the challenge here, the next challenge comes whether we will close the week above 120 or not. If Apple reverses after breaking 120, that would be a very bearish indicator. Furthermore, the next resistance now is 127. Whether we're going to reach there or not, I do believe that we will see sell the news phenomenon tomorrow in Apple. I might be wrong, but this is my bet. And I took my bullish call options bets off the table in Apple. And now moving on to Tesla. What do we see in Tesla? We talked about the 453 resistance as a very important level. Apple fulfilled its promise of breaking 120. Tesla yet to break 453. Tesla looking very weak here, and it didn't even get there even though we had a massive rally in the Qs. So Tesla looks like the weakest link right here. And of course, I maintain my bearish position in Tesla. I do have put options expiring in November in the name. And now let's move on to conclude this video. When the market gets ahead of itself, celebrating and rejoicing certain events before they actually take place, it is flashing red warning signals to take your profits and get the hell out of the market. We're celebrating the stimulus before it actually happens. We're celebrating the Apple iPhone 12 announcement before it actually takes place. We're celebrating Amazon's Prime Day before we actually see the results. Again, it is the donkey mentality of buy first, ask questions later. And you have to keep in mind, when the market behaves in this way, it paves the road for the sell the news phenomenon. You saw it recently with Tesla's battery day. Furthermore, perhaps the most important product Apple will reveal tomorrow is the iStimulus. Because with no stimulus, who will buy an upgrade to these new products? And from a technical perspective, we did break in the Qs above the trend line and recapture it. Now comes the next challenge of revisiting the trend line and retesting it as a support, whether it will hold or not. Furthermore, I did witness 3 important indicators telling me that the market will reverse very soon. Number 1, I did buy some call options on the short triple Qs today, and I bought them around lunchtime, and believe it or not, the premiums on these calls actually increased as the Qs were rallying impulsively throughout the day. This is warning signal number 1. Warning signal number 2. Why did the VIX trade in the green today? And why did it hold the 25 support yet again? Warning signal number 3. Why didn't the dollar index collapse completely today? Why did it hold support 3 times at the 93 level? Very important signals telling me we will witness a reversal, perhaps a massive one, very, very soon. And the last reminder before I log off, we do have earnings tomorrow for Delta Airlines, Citibank, and JP Morgan, aka the Landromat. Of course, we will comb through the earnings tomorrow, specifically if there is any important implications in the market, any significant developments in any of these names, and we will cover the earnings in details. With that being said, that's all I got for you today. Thank you for watching. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.